Space, and for that, Markus Helsing is joining us from AlphaBroking from Melbourne. Markus, welcome to the program. I guess when it comes to nickel in particular, we're just going to continue to see volatility around some of this, sovereign risk, not only in the Philippines but also in Indonesia.
Well, that's right. And I mean, we have also, of course, the big boss of the base metals, which is copper, that is facing potential serious union action in China. So, in what I'm saying, in Chile. So, really, overall, this is a classic sign of a resurging commodity market where prices are starting to affect certain actions on the union side, in Chile in this case, where I see there should be a bit more of a sharing of the bonanza of their mining revenues. Whereas, of course, the focus is also, as in the Philippines, as it should be anywhere else, really, on the environmental issue. It probably has a few other issues in the Philippines. So really, generally, that's just underlying supporting our general view that base metal prices have further up to go to the north. We like the general story. It is very China dependent, which we're very wary of. Hence, we strongly believe this could be the 2017 resurgence and finale of commodity prices in the industrial sector as we know it. We do believe that China is slowly running a bit out of puff of importing all these commodities on credit, and will have at some point later this year an impact on these prices. But in the meantime, let's enjoy it. This thing has a lot more to go on the upside.
But if we do get some clarity around Trump policies in regards to fiscal policy and spending and infrastructure spending coming through toward the latter part of 2017, some say it's a 2018 story. You don't believe that that could go anyway to sort of offsetting the slowdown in China?
No, I think it will support it this year. It's buying the story and probably selling it when it comes on board. Whatever the US does will be paltry in comparison to what China's done the last 10 years. So it will be a bit like the OPEC solution of coming to a price fix or an output fix, sorry. It gives an underlying support to commodities. I think that's probably as good as it gets. So they will probably not, when they do start going the other way, they will not fall as far as otherwise they could well do so. So really, generally, I reckon in a moment it's a positive story, I'm trying to say. I'm probably mixing it up a little, but it is a very geared market out there in all aspects of it, inclusive the base metals, and investors have to keep in mind that this is the fact. So enjoy the run, but be very wary when this thing starts to go the other way.
Markus, Rudy Philipek van Dijk, good to see you, Markus. You're still looking younger than last year.
Well, thanks for the flowers, Rudy.
Markus, you're absolutely spot on by pointing out that it's all about China and the US is merely a little blip. Just to give you one statistic you can throw around every once in a while.
I know this one, I think. Go ahead.
China spends in 8 months what the US is going to spend in 5 years.
Oh, yeah, I got that one. That was mine. You stole it.
Every 8 months. It's from CLSA. Anyway, Markus, I'm just wondering, if you had to pick one or two commodities, what would be your picks?
I think on the base metals, it's definitely copper, but I must say gold and silver to me, or silver as a whole to me, is becoming a screaming buy to me. The whole precious metal sectors, when you just heard the news story out of Hong Kong about the Chinese government meddling in the whole Bitcoin exchanges, that just tells you that basically digital currencies can be meddled with. It's very Orwellian, because it's all digitally available and there to be meddled with. Where people buy gold coins, they can put it anywhere they like, and that's much harder to control. So I think generally, to me, uncertainty is the word to go with. Trump screams of uncertainty, and I think that in itself, to answer your question, Rudy, I think the outstanding screaming buy is silver, closely followed by gold, and then the rest will follow down the track.
Markus, Chris McDonald from Morgans here. If we look at nickel, you mentioned it there. Do you see a short-term further rally in nickel? And if it's 3 or 6 months, what's your top pick? I mean, I have a view on Western Areas. It looks like a pretty good trading stock over the last couple of years. Do you have a view on that and nickel in general?
To be frank, I'm not. I used to be on the London Metal Exchange in the whole 80s and the late 70s, but lately I was off the nickel track. I really was more on a copper bandwagon, if you like. But I think you're on the money. I think generally speaking, there is more to come. We believe the US dollar, after an 8-year rally, will also be a positive factor towards commodity price. We believe the US dollar is running out of puff. It might have a few rallies here or there against the euro with the European election saga this year, but generally really believe for commodities the US dollar will be less a hindrance, more on support. And if you then look at the individual fundamentals of these commodities and broadly on a broad commodity basis, industrial metals in particular, to us they have a lot more to go. And as I said earlier, I think 2017 is one of these years where we see one more big commodity price rally in these particular markets, and probably the only ones left standing when it might go at some point the other way will be gold and silver.
Okay, that's interesting. Can we put the focus on energy for a minute and talk about oil in particular? Goldman seeing downside risk to the oil price in 2018, and that's because of U.S. shale coming online at a faster pace. It still, though, is expecting the global market will shift to a deficit in the first half of this year. How are you viewing the energy complex right now, I guess in the short to medium term, because it certainly feels as if we're stuck in a range right now?
Well, that's right. I mean, look, price action, technically speaking, it looks very tight. I mean, natural gas is way ahead of your Brent and WTI crude oil markets. We feel, if you look at your main oil companies, your Exxons, your Chevrons, your BP, Royal Dutch, and even here domestically, obviously, some under duress, such as Santos, and even Woodside to some degree, they look tired and they look corrective. And in some of the big ones overseas, I'm outright bearish for the next 3 to 6 months. I think had a good run over the last 12 months, and so generally our feel is we could see a broad correction where the overlying S&D scenario with oil will have just one more major price impact on oil. So we wouldn't be surprised to see crude oil trade, the West Texas Intermediate, between $46 to $50 at some point as early as the next 2-3 months. And probably by mid-year, we should find a balance in price and most likely also in S&D, and then see the basis for renewed surge in buying in oil price, in oil, as well as related oil stocks. So in a moment, cyclically, we're out of all that. We're looking to re-enter time-wise by mid-year.
And are you looking more favorably on overseas oil companies, or do you look domestically at all, Marcus?
No, we look at both. Okay. I mean, really, obviously, your Exxons and Chevrons and BP and Royal Dutch, well, they're the big bosses. I mean, Australia hasn't really got anything of that size. Woodside, obviously, is our big boy, and Santos, to us, is a geared play that I mentioned many times. It's, again, back in the doldrums. We believe Santos could be potentially a takeover target at some point, simply because it's exposed to exactly this type of action. We like the company on the big picture, and we do believe oil will see $60 and $70 a barrel at some point over the next 12 to 24 months. In which case, holding the likes of Santos at probably a bit lower levels than now, and Woodside and international oil stocks could be very, very beneficial. We just find in a moment we have these oil markets tend to go a bit counter-cycle to your more other industrial commodities such as base metals. So I wouldn't be surprised to see these rally in base metals who start to reach a certain key highs by mid-year at a time when your energy stocks and energy prices have a key low. So we're watching it obviously daily, weekly and monthly, but generally we think by mid-year we might see prices that are very attractive in energy stocks and energy prices per se.
Now, we rarely talk about softs. We don't have a lot of conversations about it, but I always think it's incredibly interesting. I mean, just going back to a conversation we had early, so dependent on the weather, also so dependent on Chinese demand. And it looks as if cotton is looking pretty sweet right now. Very bullish outlook. Can you explain the dynamics that are going on there, Marcus?
In which market? Sorry, I didn't hear you.
In cotton.
Well, cotton to me is a market. It's funny you mentioned that. Cotton, just a few years ago, China dominated by basically buying up the existing spot cotton market. The main export market is the US. That was about 5 years ago, and resulting in this huge spike in prices. Now, for some weird reason, the same thing to a slightly lesser extent has happened over the last few months, where they have come in with much larger orders, not just dominating the spot, but also the futures market. Now, obviously, this is a bit of an opaque scenario. We don't really know what they're up to. But one thing is clear. There is an above-average demand. And if it goes at this rate, we might even run out of cotton, so to say. So I doubt that's going to happen. But generally, we just feel that there is something going on that's more than noteworthy. And the technical picture looks to us bullish. We are in an uptrend. And because it obviously is a market that has a smaller volume if you compare it to another soft commodity such as sugar, etc., that has a huge volume traded and open interest, it's a market that is susceptible to major moves, and very quickly so. So we think cotton is a market that investors should really watch, and if they have an interest to be part in that, they should definitely have a toe in the water.
Yeah, great. I love that. And of course, we'll get a USDA update tonight on grains, but we just don't have time to get into it today, Marcus. It's a pleasure having you back, Marcus. Thank you so much for joining us.
Thank you so much.